Hello and welcome to the Airline Weekly Lounge. I'm your host Gordon Smith and I'm joined as usual by Jay Shabbat. In this week's show, we're heading for Japan with the latest insights from the country's two mega carriers. Hi Jay, how's it going?
Okay, Gordon, how are you?
Doing really well. We are heading eastward to Japan this week, but we've also got something else happening in the Asia-Pacific region as we're recording here on the 3rd of February, and that's the Singapore Air Show. And sort of bolted onto that, there is the Changi Aviation Summit. And Willie Walsh, who I know is a familiar name to many people listening to this podcast, he joined us at the Skift Aviation Forum in Dallas in 2024. As my memory recalls, I should know that. I interviewed him on stage. He was speaking in Singapore, and we had some highlights from his address to the room, Jay. He's obviously representing an airline trade body here. He does have a very clear agenda. He knows who butters his bread. What did we learn, if anything, from Willie Walsh's comments?
Well, we learned that last year, 2025, was a good year for the global airline industry. And as you said, he does have a job to do. And one of those jobs is ensuring that the governments of the world, that the regulators of the world don't think the airline industry is doing too well, lest they, think it's a good candidate to tax even more than it already is or regulate even more than it already is. So, part of his job is like, our situation is horrible. You got to help us out. But he also acknowledges that in terms of demand, it really was another good year. Probably you could say that the third consecutive strong demand year post-pandemic, coming out of the COVID shock. And the numbers looked really good. I mean, in terms of just demand measured by traffic, this is measured by RPKs, so that's revenue passenger kilometers. They're also incorporating distance into this measurement here. But passenger traffic by RPKs grew 5% in 2025 versus 2024. So that's pretty good. For an economy that's probably growing less than that, that's, count that as a win. And if you look at just international traffic, that was up 7%. So domestic up 2.5, international up 7. So that is a very, very robust growth. There's really no disputing the fact that demand is growing. Now, another major point that Mr. Walsh emphasized was that the supply chain disruptions that have been prevalent coming out of COVID remain very much a problem. And IATA's own economists did basically, some estimates about what those supply chain difficulties were costing or are costing the airline industry. And obviously that's going to be a very rough estimate. It's, you can't really put a very precise number on this, but IATA says that $11 billion was what it cost the industry last year. And they said about 2/3 of that figure was because of the additional fuel and additional maintenance that the industry is paying because it's using older aircraft. If it wasn't for these supply chain disruptions, you'd have a lot more of the newer generation, more fuel-efficient jets flying around. And so as a result of having to fly some of the older technology, you're incurring additional cost. So again, take that number with a grain of salt. There definitely is a cost associated, a meaningful cost associated with the supply chain disruptions.
For sure.
Of course, he didn't say this, but I think it's pretty universally acknowledged that the supply chain disruptions also help the industry on the revenue side too.
Absolutely.
If airlines can't get airplanes on time, then some of that capacity is going to be backfilled by keeping older planes in service longer than they would have been. Some of them, sometimes you go out and lease additional aircraft, but in general, there are fewer airplanes or fewer seats flying than would be the case were there not these supply chain disruptions. So that's going to push up your yields and your unit revenues too. So where does it wash out in the end? Hard to say. But
Willie Walsh out?
Yeah. Yeah, Willie Walsh out. There you go. I like that. But yeah, never know for sure. But I think, my sense is that all things being equal, The airlines would rather have their new planes, but I do think it's probably a net positive if you think about what it's done on the revenue side versus what it's done on the cost side. But that's more of a hunch than anything else on my part.
No, I broadly agree with you, Jay. And as you said, Willie Walsh in Singapore, he said around 2/3 of that 11 billion figure coming from additional fuel costs and maintenance costs, as the industry is operating a fleet that is on average 2 years older than the long-term average because of the delays in the delivery of new aircraft. Walsh adding, regrettably, and you can obviously discuss whether it is a true regret or not, we see the disruption continuing for some time to come. And also sort of the classic IATA playbook, you hear it time and time again at the AGM, and also whenever they get their analysts and their executives out on tour, Jay, they like to bring the net profit per passenger down to very sort of rational terms. It's quite often described as being the same price as a cup of coffee in Geneva, where IATA has its big base. And Walsh said in Singapore, in just putting everything in context, the best year of the airline industry in sort of recent history at least was, in terms of profitability, 2015, when we delivered an operating margin of 8.3% and a net margin of 5.0%. Net profit per passenger in 2025 and in 2026 is, quote, a meager $7.9 USD per passenger. Now, there's no doubting the margins are thin and there's not much margin for error there. The big question that maybe some of our newer listeners might be asking is this a structural failure of the airline business model, or is it just a reflection of a high volume business? Yes, you're only earning on average $8 per passenger, but if you've got a heck of a lot of passengers coming through, it sure adds up.
What it is, it's a reflection of a business that's very, very, very heavily capital intensive. It's very, very heavy labor intensive. It's also extremely, extremely competitive, and it's extremely, extremely regulated. So you combine all those factors, and you could sort of see why the airline business is a chronically low margin sector. You have certain regions of the world. The U.S. market, for example, during the 2010s was a little bit above that. I mean, you mentioned how 2015 was a record year. Willie Walsh mentioned that as a record year for the global airline industry with, what was it, Gordon, did you say 8%? Is that what Walsh said? For
8.3 operating margin, net margin of 5.
Okay, 8.3 operating. And remember, 2015 was the year that fuel prices absolutely tanked. So that was, that pretty much explains that right there. So, that said, during let's say the latter half of the 2010s, U.S. airlines earned more than 8%. A lot of them did on average anyway. So there are regional differences. But yeah, it is a very structurally low margin industry. I mean, you can compare that to, the Silicon Valley tech sector, and, Microsoft will come out with 40% margins, and it's a very, very different, or even the railroad industry in North America, 40% margins. So 840, you can see there's a big difference. And one thing that IATA has long tried to do is recapture some of the value that the industry generates that is currently captured by airline suppliers. So if you think about the money and the margins that are going to the aircraft manufacturers, the aircraft distributor, the airline ticket distributors, the software companies, the engine makers, you can go on. IATA has tried to sort of recapture some of that, but it's a competitive industry. There's only so much you can accomplish in that respect. Remember too that a lot of the suppliers are in duopolistic, triopolistic situations. I mean, Airbus and Boeing is the best example. Hard to really drive too hard of a bargain with, your aircraft when there's only really two major providers. So whereas, airlines in the US alone, there's, 10 of them, or however many major ones there are now. So yeah, it is just structurally very difficult industry.
Speaking of two major providers, Jay, beautiful segue to Japan, because we've got ANA and Japan Airlines, and we've got sort of ANA Holdings, and obviously Japan Airlines has got various fingers in different pies as well, Zip Air, Tokyo, and others. An exciting market, a dynamic market, not without its challenges. Let's take a look at these latest numbers from these two very large operators, Jay, because like I said, we're recording here 3rd of February. We've had some fresh numbers out of both of them. Where do you want to begin, Japan or ANA?
Well, what I'll begin with is a look at their operating margins. We'll compare both of them.
Sounds like a plan.
We'll look at the calendar fourth quarter first, and then we'll go to the annual. So everybody be ready. I'm going to read off a lot of numbers here, but I'll try to be slow and try to put them in context. So first we'll start with, this is for the October to December period. So we talked about last week. Remember when Ryanair, you and I talked about them, we said they were on a different fiscal versus calendar year. Let's not, again, get too caught up at when these, airlines are, how these airlines treat their year in terms of their accounting, but just looking at the January to December calendar year now. So in terms of that last quarter of the year, October to December, Japan Airlines just beat On the Pond by 1 point. So 13% versus 12% for ANA. So JAL 13, ANA 12. Very, very good numbers. Both of those numbers for both of those airlines were up year over year, and both were actually up by a couple points versus 2019 as well. So these are two airlines that are actually performing better now, at least this is, for the quarter, better now than they were pre-pandemic, which is, that's an important statement to make, because that's not true for a lot of airlines. We've talked many times on this podcast about how since the pandemic, there's been a ton of cost inflation, ton of, additional competition and other factors that have pressured airline margins now versus then. But in this case, these guys are doing better now versus then. Now for the full year, a little bit of a different story, but a lot of similarities. So for the full year, Japan Airlines again was the winner. 9.2% was their operating margin for the full year, and On the Pond was 8.4%. So again, these are, we're talking about, they're pretty close to each other, and I'll mention a few reasons why there might be a little bit of a disparity, but why JAL is doing a little bit better. But 9.2 versus 8.4. Again, both of these numbers were better on a year-over-year basis. And in On the Pond's case, the annual number was better than in 2019. In JAL's case, it was a little bit worse, but pretty much right there. So that's we'll start with that. Give you a broad picture. Yep. Mm-hmm.
I mentioned a couple of airlines at the very start: Zip Air, Peach, Japan. These are all subsidiaries. Just to be really clear at this early juncture in our conversation, when we are discussing JAL and ANA, is it the groups, including some of these divisions and subsidiaries, or is this just the mainline operation that we're looking at?
Yeah, thanks for that question. It's a good one to clarify. So in this case, yes, in both of these cases, we're talking about the groups. So you mentioned some of the subsidiary airlines that are included in those groups. These are airline groups that also have substantial cargo businesses. For example, Japan Airlines, about 10% of their total revenue is cargo. They also have, the mileage businesses, maintenance businesses, ground handling business. ANA even has a drone business. So yeah, this is a group-wide numbers. The passenger business, think of them very roughly, something like 3/4 of their total revenue, maybe it's close to 80%, is the airline itself, the airlines themselves, including in the LCCs. But even, and also remember that the LCCs here, you mentioned Peach, you mentioned Zip Air, these are pretty small at this point, revenue-wise. So the big, the big chunk of revenues here that we're talking about are still, the core international passenger business, domestic passenger business. And it's a good question, because if you recall what we talked about Korean Air in the past, Korean Air is still not, their numbers that they're putting out still don't incorporate Asiana, which they just bought. So that's an important thing to recognize when you're looking at their numbers. But yeah, good question, Gordon. JAL and ANA, it's all in.
It's all in.
Mm-hmm.
Let's take a look just before the break, Jay. Give us one of the key themes that stood out for you when you were looking at the numbers, either JAL or ANA or both of them, that you think our listeners should know about that influenced these figures.
Yeah, I'm going to give you some demand themes here that largely was true for both airlines. So one is that the international inbound demand continues to be really strong, and that's been another one of these themes that has been true really since, coming out of the pandemic, 23, 24, 25. And a lot of that is tourism, some business, but a lot of that is tourism. Japan still continues to track a lot of international tourists. A big reason for that is the cheap yen, or the foreign exchange rate, which continues to depreciate. And other reasons too. I mean, the government has put in a big effort to try to promote tourism as well abroad. So that's helped too. So that aspect, very, very strong. Outbound business demand from Japan. So if you think, Japan it is the fourth or fifth biggest economy in the world, a lot of huge international companies, Toyota being the biggest company in Japan by revenues. Both of these airlines said that outbound international demand was actually stronger than expected last quarter. So that's been going pretty well. And then even domestic is Japan is a very, very large domestic market. It has been shrinking over time. Some of that is due to just Japan as a shrinking population. Some of that has to do with, there's a number here. Yeah. So All Nippon said that business travel in volume terms, not revenue terms, business travel domestically is down 20 to 30% from pre-COVID levels. So you can see there is that kind of structural contraction of the domestic market. Now, at the same time, you still have a lot of those foreigners that I mentioned that are coming to visit Japan. A lot of them are flying around domestically when they get to Japan. So, they might fly in from, Paris to Tokyo, but then they'll spend a few days in Tokyo and then maybe get a flight up to Sapporo or, to Osaka or whatever. So there's not a hard line between international and domestic. There's some overlap there. There's some intermingling there. So all that being said, the domestic market is pretty healthy, shrinking, but healthy.
All right.
And you can see that in the yields too. And I'll stop there as a few. Be sure everybody to, I always kind of say this but would like everybody to, make sure to catch the upcoming feature story, because we'll have a lot. There are other aspects of demand that are interesting, to just some interesting trends that need to be highlighted, that we'll skip for now, but we'll talk more about in the Airline Weekly issue.
For sure, yeah. Date for your diary, February the 9th for the next Airline Weekly issue. If you're not already a subscriber, go to airlineweekly.com/subscribe, and you get a free trial issue and take a look and see if you like it, and then hopefully subscribe. That's the idea, Jay. We'll go into a bit more detail, all things Japan in part 2. Before that, just a quick reminder to send any questions or comments that you might have for us to podcasts@skift.com. That's podcasts with an S at the end. And please don't forget to follow or subscribe to the podcast wherever you're listening or watching. And if you are enjoying the show, please rate us 5 stars or leave us a positive review so we can continue to spread the word about the Airline Weekly Lounge. Don't go anywhere. We'll be right back. Hello and welcome back to the Airline Weekly Lounge. I'm Gordon Smith and I'm joined as usual by co-host Jay Shabbat. We are discussing Japan. Jay, just before the break, was discussing some of the larger themes. These have been around for several years in a few cases, but also some of the newer trends as well, Jay. Like we said before the break, we've got a lot more detail in the feature issue in Airline Weekly, so we don't want to go into it in great detail, but there are also just a few other areas where I want to pick out in terms of the differences between ANA and JAL. Fleet is one of them. I was writing last year about ANA's shopping spree. We have a Skift take, which some of our readers might have seen. As an Airline Weekly subscriber, you get access to the airline news on skift.com. And my Skift take here from February 2025, so exactly a year ago, was ANA's $14 billion aircraft deal. I said 5 models, 3 manufacturers. Japan's ANA buys a bit of everything. And in my Skift take, I said, it's a fascinating aircraft assortment worthy of an omakase tasting menu, because they bought stuff, I know it's a very technical term, from Embraer, from Airbus, and from Boeing. Obviously, ANA, sort of in aviation circles, notable for having those wacky flying Honu A380s that they tend to send between mainland Japan and Hawaii. They also have some other broader differences with JAL, Jay. Was there any indication as to, in these latest numbers, around fleet, around perspectives there, around direction between these two carriers?
Am I allowed to talk about network?
Of course you can. Yeah.
Okay, I gave you the fleet, and I'm gonna do network. So there are some differences in the networks that both of these carriers fly, and to a certain extent, it explains some of the variance in their financial performance over the years. One thing to note we'll start out by saying that All Nippon does have heavier exposure to the Japanese domestic market, which over the past couple of years, I said it's, had a pretty good quarter. Yields are rising. It's not a bad market by any means, but I think the real buzz, the real strength has come from the international market, particularly the long haul international market. And JAL has more exposure to that. So that benefited, JAL a lot, even before the pandemic. JAL, interesting, and I've talked about this many times in the past, but worth mentioning again, that Japan has always had a lot more Japan Airlines has always had a lot more exposure to Hawaii than All Nippon. And Hawaii, I think that was kind of their secret sauce, one of their secret sauces for Japan Airlines. What explains Japan Airlines doing so well during the 2010s and consistently outperforming ANA during the 2010s? There's different reasons. One is that they went through bankruptcy restructuring, got their cost down the early part of the decade. You can analyze this to death and go into, the top 100 reasons or whatever, but we'll stick to one right now, one very important one, and that being Hawaii. Hawaii really was just a superstar market during the 2010s. We know that from how well Hawaiian Airlines did. They were a Japan Airlines partner. That coming out of the pandemic was much weaker. And I don't want to say that's solely responsible for this, but if you look at a trajectory of operating margins for both of these airlines over the past couple of years, All Nippon actually, even though 2017, 2018, 2019, they underperformed JAL, All Nippon in 2023, so that's your first year, full year of recovery coming out of the pandemic, they actually, for the first time in many, many years, actually did better than JAL. They repeated that feat in 2024. I think a lot of that was the fact that Hawaii was really bad. 2025, as I mentioned before, flipped again. JAL outperforms ANA. Could be, to a certain extent, somewhat attributable to Hawaii recovering. If you look at last quarter's load factor numbers, RPK demand increase numbers, they give some of that. They don't provide a ton of insight or color behind exactly how Hawaii is doing, but it seemed like that market is doing much better than it was over the past, couple of years coming out of COVID. So that is a big tailwind for Japan Airlines, I think, as best as, I can tell from limited transparency here. The other kind of thing that's important to know about JAL is they are more exposed, not extremely more exposed, but as a percentage of their total, seat capacity, they are more exposed to the continental North American market as well. So that's, North America minus Hawaii, minus Guam. That market has done very, very well coming out of the pandemic last couple of years, continues to do very, very well. Premium in particular in that market, very, very well. So I think if you're looking for another reason of why Japan Airlines is now once again outperforming ANA, even if just by a little bit, but that North American market is I think a good place to look.
Had a pretty nice joint venture as well with, I think it's the Joint Siberian venture. I think Joint Trans-Siberian venture, don't quote me on that. I think I'm muddling up. You love the railways as well, Jay, the railroads. I think I'm mixing up the Trans-Siberian Railway with the Finnair, Iberia, British Airways, Japan Airlines, JSV, Joint Siberian Venture, I think is it?
Yeah, the Trans-Siberian Joint Venture. Yeah, exactly.
There we go.
So that's Japan. Well, by whatever name that's exactly. Japan Airlines has that joint revenue sharing with IAG, British Airways, British Airways, Iberia, and then Finnair is in that as well. And then they, of course, also going to North America, have a close joint venture with American Airlines,
for sure,
which explains why they fly to Dallas, Fort Worth, as one example. And then, ANA has their own joint ventures too. They have quite a few. They're, close with United in North America, and they're close with Lufthansa in Europe. They have some Asian partners as well, like Singapore Airlines. So joint ventures, definitely.
But not quite sort of Korean Air and Delta levels of integration, I should say, as opposed to integrity, and just sheer bullishness in terms of we are making Incheon an absolute mega hub, and we will do everything we can to fend anyone off.
Yeah, right. And Delta, Delta because even going back pre-Northwest Delta merger in 2008, Northwest and KLM pioneered this whole idea of a joint venture. And they have always just been believed very strongly in very deep integration. So you'll have some of those Delta joint ventures, like with Air France, KLM, Virgin Atlantic, Korean Air, where they're actually not only sharing revenues, but they're sharing costs as well. So it's really, really deep integration. Now, if you're looking at just the Asian joint ventures and trying to compare, Japan and Korea, remember then when you're Delta and you're cooperating with Korean Air, you're really only dealing with one airport in Seoul. I mean, Seoul does have a domestic, oriented airport, but Seoul Incheon Airport is pretty much the name of the game for international long haul. Whereas if you're Japan, it gets a little bit trickier to kind of run a joint venture because you have some of your stuff going into Narita Airport, some of your stuff going into Haneda Airport. And so, it's not, you don't have all your chickens in one coop or whatever that expression is.
I'm sure there's
I just made it up on the fly, but
I'm sure there's some Japanese metaphor we could use as well.
Yeah, we'll let someone else come up with the metaphor. But I don't know where I got that chickens in the. I don't know, but anyway,
eggs in one basket.
Eggs, sure. Yeah, eggs. That's where probably I thought chickens, eggs. Yeah, okay, eggs in one basket.
Oh, yeah, chickens in one coop. That works. Yeah,
I just invented some new expression here.
There we are, rewriting the English language even in 2026.
And also, the other thing to know about the Tokyo airports is that Narita Airport will be adding another runway. 2029, I think, is the expected opening, and I believe another terminal. And they're actually extending one of the existing runways. So if you look at on the pond, again, just using them as an example here, they came out recently with a new kind of updated business plan, you can say, and they plan, you can see that they plan on tremendous growth from Narita Airport. Remember, Narita is the one that's kind of less preferred among business travelers because it's a little further away from the city center. Yeah, so tell us. I don't know.
No, I've very recent experience. Flew through Tokyo in October last year in order to get to a work event, and it had been a while since I've flown through Haneda. And I was spending a couple of days in Tokyo and then heading down to Haneda. And it was unreal, even in sort of 10 a.m., 10:30. So it wasn't peak morning rush hour, but nonetheless, it was still busy enough. It took me 25 minutes from my central Tokyo hotel to the terminal door. And that was in a cab as well. So I had quite a lot of luggage. I wasn't going to mess around with the train just based on my individual circumstances on that very morning. But the same journey from my hotel to Narita would have been well over an hour. And obviously you can choose your district in Tokyo in the same way that, if you're in South London, Gatwick Airport is actually very convenient. If you're on the railway line, if you're in North London, actually, you can get to Stansted relatively quickly. So it's not always a case of Haneda is best, but you're absolutely right, Jay. If you were speaking general terms, Haneda is by far the closest to the vast majority of the attractions in the greater Tokyo area.
Right. And so you keep that in mind when I tell you that All in the Pond plans on growing at Haneda just 12% between 2025. This is using last year as a base year, 2025 and 2030. So that's 12% at Haneda. And then 66% is their growth plan at Narita. So They're going to be growing at the one that's sort of less preferred. So that could put some pressure on yields. And this is the Japan Airlines, as far as I know, hasn't actually come out, hasn't publicized these same forecasts or these same, this kind of plan. But I imagine that with the new airport capacity in Narita, it's going to be similar. So there could be some pressure on yields. So, just one thing to keep in mind. We haven't talked about, there's a lot that we haven't talked about, but I guess we should, because it is topical and it is, meaningful for earnings right now for these carriers. There is a dispute between Japan and China that's resulted in some demand deterioration, particularly going from China into Japan. All in the Pond also gave some little bit of detail on that. They said the figures were negative in December. That was probably the worst of it, but they have seen some pickup in January. Now, both of these Japanese carriers have reduced their capacity to China quite a bit. So you don't see, I was looking through some of the load factor numbers. I didn't really see any meaningful deterioration there in terms of, in fact, if you look at the Japan-China market is very low load factor market anyway. It's always, it's going to be a lot lower loads on average than say, Japan to US or Japan to, Korea, whatever. But I didn't see any, in fact, I saw there actually an increase in load factors year over year. So you're more seeing it on the yields, what people are willing to pay, and the volumes too. I mean, like I said, the both carriers cut capacity a lot too. So lower volumes, less capacity, but the loads are holding.
Interesting, Jay. And certainly one of the analysts that I was speaking to who's privy to that part of the world in some of the numbers, he was suggesting that the Chinese group trips, which were a huge part of that, they tend to prefer to fly on Chinese metal. So a Chinese airline flying outbound from China to Japan. So that may be another factor as to why we're not seeing the dispute, as you mentioned.
Yeah, good point. The Chinese carriers may be feeling it more because the kind of lower yield group traffic is going to be on the Chinese carriers more not. Interestingly enough, I should mention that Japan Airlines does have a partially owned subsidiary called Spring Airlines Japan. And Spring Airlines is a Chinese airline. So it's a Chinese brand. Spring Airlines is based in Shanghai. They're owned by a big Chinese travel agency. So you can see how Japan Airlines, by buying into that, is sort of playing into what you're talking about, that there's a preference there. So
got it. And that brings me neatly on to my final point, Jay. The news today that Qantas is preparing to sell its full holding in Jetstar Japan. We're not going to go into this in full detail, much more color on this in the next issue of Airline Weekly, but non-binding deal announced Tuesday as we're recording here. Qantas intends to divest its 1/3 stake in Jetstar Japan. It's not going to affect Jetstar mainline, and it's obviously 9 months after Qantas pulled out of Jetstar Asia. That was its Singapore-based brand. But all the mood music coming out of Qantas today saying, yep, we're pulling out subject to regulatory approval, but it's really going to fund capital investments on its core Australian brands, both Qantas and Jetstar out of there. Who is going to be taking that sort of former Qantas share, I hear you ask? Well, it's going to be the Development Bank of Japan, set to enter the ownership structure alongside financial group Tokyo Century. And of course, Japan Airlines will remain as its largest shareholder. Much more detail and analysis in the next issue of Airline Weekly. Anything to add, Jay, before we wrap up?
No, I think we covered Japan pretty exhaustively there. Well, I shouldn't say exhaustively. There's a lot more in the the issue coming up, but yeah, you never exhaust all the information on these exciting subjects. But yeah, we covered a lot, and that's all I've got.
That sounds good. All right. A quick reminder that as an Airline Weekly subscriber, you get access to all the airline news on skift.com, plus Skift Research's airline reports. Go to airlineweekly.com. But in the meantime, thanks to Jay for joining me and giving me that Japanese analysis, and also some running commentary on the latest comments from Willie Walsh. Thanks to our producers, Jean, Monica, and Will. And thanks to you wherever you are in the world. Thanks for listening, and we'll catch you next time. Bye for now.
Whether you're listening to us on Spotify, Apple, or wherever you get your podcasts, please make sure to subscribe, rate us 5 stars, or leave us a positive review. This really helps us get the word out about the Airline Weekly Lounge, so we can continue to bring you this podcast every week, absolutely free of charge. And if you're watching us on YouTube, make sure to subscribe to the Skift channel and hit the notification bell to find out whenever a new video drops.